Well, good morning, everyone, and welcome to the pre-market rundown for Friday, August 13th, Spooky Dookie 2021. Hey, I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and thanks for joining me today. And every week on Fridays at 9 a.m., we go through this and we talk about what's happening with the markets. As we do always, and as we are required to do so, I want to make sure that you are aware that this information and discussion is for educational purposes only. Of course, investing involves substantial risk, and in fact, past performance is not a guarantee of future results. Loss of original capital can occur. So everything that you're doing here really and what we're talking about is just a better understanding of where we have a kind of a bias in the markets. And when we use the techniques and the tools that are inside these indicators that are provided through the TradeStation trading app store, we look at where we have the opportunity to find a higher level of confidence when it comes to the overall markets or an individual stock, right? We talk about that. So the bottom line on what we're doing today and what we do each and every week is try to understand a little bit more about where we have the potential for an edge, if there is one, according to the idea of volume and price. What we do is we combine those together, come up with a calculation to provide a significant amount of information. Each and every tick, every single time a trade is done, that is noted, that is added to the calculation, and it says, okay, well, how many shares were done volume and at what price? So instead of looking at a static volume bar, what we're looking at is a way to see this in a much more apparent manner. And we build what's called a market profile. When we build a market profile, then we see where those levels are very distinctly inside of a particular range, inside of a particular area or a swing, as we call it, and then it provides you with that information and where the opportunities for breakout, breakdown, or consolidation are. All right, well, let's start with where we are in terms of the overall markets, in terms of the pre-markets. So we see that the YM's up again today. Hey, here we go. Well, again, it's been kind of regular these days on the markets. The NASDAQ is starting to move up. It was down. The futures were down before throughout the night. And SPOOs are right in the middle. We saw gold up 12 bucks and Bitcoin up 2,000 at 4.68, closing in on a relatively new area of interest in terms of over the top of the recent high that we set a few days ago. So again, we got the disclosures there. You read all those. Let's talk about some of the things that are really moving markets or that are in play right now. And the big one that we have to look at is the fact that earnings season is coming to an end. And earnings season coming to an end is an important issue because really what we find that there's a lot more volatility as we see that companies are, well, meeting or beating expectations. And this quarter, we saw a very significant beat ratio in the high or mid to high 80s when it came to earnings, and revenues also beat. There was a lot of really good news out there. This is on the heels of a very good quarter last quarter as well. And what was really fascinating throughout the quarter and last quarter was just how absolutely horrible analysts were at predicting anything. It was very difficult for analysts to really come anywhere close. In fact, what was, I thought, interesting was just how wide of the margins when it came to revenue and earnings. When you have a stock, for example, that expectations were for 50 cents a share of earnings for the quarter, and they come in at $1.72. I mean, that's a pretty wide margin of beat. You didn't see the same thing on the losses, but if you think about it, this is kind of what you see in reverse when things are going bad in a market downturn, where you have companies that not only are surprising, but surprising really badly to the downside. And that's when you see stocks moving in the wrong direction. Right now, there's still a tremendous amount of liquidity in the markets, and that is helping to obviously propel many areas. Still seeing some weakness in the small caps in a consolidation mode since the beginning of this year. Now, that's a wide consolidation from about 210 to 230. I'm looking over to the right here, and what I'm looking at is in this range, where we're seeing that in the beginning of this year, small caps 210 went down to the unchanged level again in mid-July, popped back up. But you see this general range of consolidation that we're looking at right here with nowhere to go. What that is telling us, and what we do know because we've been looking at this for a long time, right? All of us, is that, well, the mega caps have been really stealing the show. The big tech has been doing very well, even big energy to a degree, and banks up until very recently have really been doing well. Banks did have a rotation back to a nice uptrend very recently over the last couple of weeks as interest rates moderated, but then over the last week started to pick up very substantially. And we saw then once again the NASDAQ was weaker on a relative basis than, let's say, the Dow or the S&P 500. Now, the other thing that's very interesting that's been going on right now is this whole idea of, do we have inflation or don't we have inflation? What's going on with yields? So as we are seeing each bit of information flow in from GDP to CPI to PCE to PPI to the cost factors related to productivity and, of course, for unit labor costs, all these things are just parts of the puzzle that provide us with information related to how we are going to view inflation in the future. Is it, in fact, here to stay? Is it transitory? Now, some of the things we talked about was, even if it is transitory, and we see that the rate, focus on my words here, this is really important, the rate of growth, the rate of percentage change will moderate over time. The fact is, unless we go backwards and prices come down, those are very sticky levels of absolute dollar price increase in the overall cost of the item, rather than simply just looking at, there's only 2% inflation. Well, yeah, but that's on the heels of 8% year-over-year inflation, meaning that prices are higher on a year-over-year basis. They may not be increasing as rapidly, but still the prices are higher. And what does that actually mean? Something to look at, and that has been really dragging and thrashing around bond yields, which hit 1.12% on the 10-year earlier last week, until we saw some things turn around with the jobs numbers, the PPI, CPI, PCE, and everybody started, wait a minute, that was a double bottom right there. And they ramped it up into the 1.3 plus area where we are right now. So 1.4 is now the overhead on the 10-year bond yield. That has a lot of implications. It's pretty good for banks, as you see what's called the 210 spread separate. It's not as good for tech companies, for example. Just as an example. That doesn't mean it's necessarily going to really put a damper on that, but it's not as good for them. Now, one of the things that we did see was the yield curve widening. Of course, that happens usually when you see the spreads come up, and you should keep an eye on that if you can. Somewhere look at the 2-year and 10-year spread, the differential between the two, and if you see that over time start to expand, it actually is much better for the financial firms, and it will yield a better potential return on that. But yet, at the same time, I'm just going to finish with this point on all of this. I think that the markets aren't really paying a lot of attention to this. They're beating to their own drummer, and I think that still, and we talked about this forever, it seems, is all about liquidity. The fact of the matter is, we're seeing a lot of liquidity in the markets with regard to how much money is pumped in by the Fed. And we're seeing that is, as naturally does, leaks into all sorts of other areas of the markets. Well, there's a lot of talk about tapering. So now that we have this inflation discussion and this concern about, interest rates going up due to the fact that the economy is doing a lot better and things are a lot better, generally speaking, in terms of healing, even though we have this new Delta variant, which is a little bit of a problem when you think about certain areas of the markets, like, for example, hotels, airlines, et cetera. Airbnb is talking about that today in their earnings call, talking about how there's a concern about, how everything looks good now. Everything looked good before, but maybe there's a concern about this Delta variant and cancellations are starting to come up, something that needs to be watched. But Fed is putting up trial balloons. The trial balloons are all about prepping the markets. The idea that you want to make sure that markets are ready and can handle things. And give us an idea, as we are saying this, what does it look like? What do the markets do? So the Fed is sending up trial balloons, and these trial balloons are all about looking at, what if we do start to taper and start to pull back on our bond purchases a little bit early. So I don't know if that's really necessarily something that's going to happen. The Fed needs to keep buying Treasury issuing debt. You have to look at what's going on with regard to the fact that we have a significant amount of money that's going to be spent on this infrastructure bill, and how do we fund that? Well, there's a lot of different ways inside of there, but some of it is going to be for new debt. Well, the Fed's going to probably have to purchase that debt, and they really can't have the affordability of higher prices. Bond vigilantes are something to keep a watch on as well. Question came in about this discussion of interest rates as well as the sticky prices. Does that put a floor, maybe a flimsy for earnings, the sticky prices? The question really is, I think, about whether or not that can be passed on to consumers efficiently, effectively, and without too much of them having their own tantrum. So right now, it looks like a good chunk has been passed on to consumers, and consumers are absorbing it relatively well. Again, high liquidity, you got the wealth effect that's going on, you got wage increases that are going on, more people back to work. All those things will help out the overall potential for individuals, not companies, absorbing the cost increases that go on. So something to think about. Thing that we want to look at is go for safety. We talked about this a couple times over the last couple of weeks. I believe that this is something that is still going on. Quality, big over small, is something. U.S. over EM. Anything over China. And again, the Fed is still in play here. China's been having all sorts of problems as a lot of faith and confidence is being lost in their regulatory environment and their markets due to the fact that they have a government that right now is swatting all sorts of players out there. New info to study. Well, I think the markets are on generally autopilot. We're seeing the Qs come up again this morning from a downstroke. You see this every day. Once the bell rings, Pavlovian response is that we have massive buy orders that come into the futures markets. That also, along with buy orders on market open that come in tremendously because there's a lot of money that needs to be distributed. That is causing a significant amount of opportunity, but at the same time, it's putting a floor under certain areas. We haven't seen a correction of more than 5%, which is not much if you think about it, on any of the major markets is in over like 10 months. Yeah, this did. Of course, the IWM that we're looking at here, went from 240 to 210. That's a pretty good correction. But again, remember we talked about up here, right? We talked about this idea that, hey, big over small. This idea of big over small. And that is the predominance of the major market indices that you watch on a regular basis, right? The Dow, the S&P, the NASDAQ. So I think we have this this idea of there's a divergence going on in U.S. valuations, twofold. One, to a degree, large, small, but more importantly, and I think this is really important to look at, is the U.S. valuations to everywhere else. Really fascinating review. If you can kind of look that up and study that, and I encourage you to do so as your homework. Where are the real valuations? Where are the real bargains out there right now from a fundamental basis, not technical? FDA approval on the way. The vaccine manufacturers riding a wave. I mean, if you look at Moderna, BioNTech, and Pfizer, wow. I mean, yeah, they go through their choppiness. There's no question about that. But pretty interesting moves that we saw recently. Clearly some notes of slowing from reopening craze, which is to be expected on the economic side of things, that we understand that, when you reopen, all of a sudden there's a flash of light from an on position to an off, then an off to an on. And that is very binary and very incredible. Well, what happened here is that we saw that happen right before our very eyes over the last year. And what you have to realize is that you're going to see a very significant bump or explosion to the upside of the potential for liquidity and for companies back to earning money and for people spending and for people getting out and people earning and all the things that are involved with that. But then what happens is it moderates. Just like if they want to talk about inflation moderating over time, this is the same discussion, moderation over time. So we see that prices are high right now on an economic basis, where we see that the CPI, PPI, PCE, all of that is really flashing some significant inflation. The employment situation is healing. There's no question about that. Housing starts and housing market slowing a bit. I think that also has a lot to do with the interest rates, input costs, cost of houses, prices that are absurd. If you look at the Case-Shiller numbers over the last week or so, or last, not week, but month, 2 months, 3 months, year over year, really substantial increase in houses. If you've done any look at what your house is worth, you'll see over the last 6 months, it's like a hockey stick in most areas around the country. Prices have really increased dramatically, and that has been something to really see that's been substantial. Next week, we have retail sales, which will be important to look at. Housing starts, the Philly Fed, and leading indicators. In the chat, I put a little notice that there's a 4-hour coaching session that is available. You can look at that at your leisure. Anyone who does, in fact, subscribe to the TriggerCharts Commander Series set of indicators over on the TradeStation Trading app store will get that for free. It's $199 value. So make sure to go over there and check that out. We're going to also look at some of the stocks that you are putting into the chat. I see a couple that are in there right now. If you do have any stocks that you want us to look at, a lot of people just like to look at what we're talking about and really kind of bring that to into their thoughts. But if you do want, this is a time that you can reach out and put it in there, and we will be happy to take a look at that. So what I'm going to do now is a few things. I want to look at a few things ahead of looking at some of the stocks. Let's look at the KRI, the key reversal indicator. And with that, we have to look at where we are. We see that stocks in the S&P 500, the SPY, the ETF is at an all-time high, right? Well, we note that, and that's pretty interesting. And I think that we have to pay homage to the fact that, hey, we got this really nice movement up here. This is a pretty reasonable channel that we see that's going on. Really not a lot of volatility. Some in certain places. Yeah, there was a big chunk right here. It got to a little bit of an oversold level. But right now we are once again looking at this kind of +3 range, not as overbought as we see sometimes, right? Sometimes when we look at this, we find that there are definitely areas, and we can mark those. We can see those with these clusters, right? We can see these clusters form, and we know that, hey, things are getting a little bit hot. And you'll notice that after we see these clusters form, we see these kind of quick drops. Same is true when we see, we don't see any clusters here, but we see these bottoms with reversals when we're under the zero line. This only was a -2, not a big deal here. This does one thing and one thing only. It does a pulse psychologically as well as from a internals-based look at overbought, oversold, or market in equilibrium. You can't change anything. SPY is just the code we use to make sure this launches properly. Use any other symbol, it's not going to work. Bottom line, this is what it looks like all the time. It's not like you put a stock in there. It's inexpensive. It's a great tool. I keep this on my screens, look at it a couple of times a day, in the morning, in the afternoon. Where are we? Where did we start? Where did we finish? We know that we went from a 3, for example, yesterday. Will we see that kind of inching up again? And is there going to be any of these clusters that form that are going to make me kind of nervous? Something to watch, just another tool in my toolkit to give me a good level of confidence in what I'm doing. All right, let's take a look at this. I think first we'll look at gold. A lot of people are looking at gold and saying, hey, what is going on? Well, we saw the dollar come up in value. We see the fact that there is the concern about rates right now. Inflation is out there. And you say, well, wait a minute, whoa. We have inflation, but yet gold, and we confirmed it, but yet gold drops from 168 down to 160, doing a little bit of recovery right now, 165 in the morning. There's that range that we've been talking about, right? We drew this box a long time ago. Look at that. Look at that range back from July. Still can't get out of it. Now what we have to do is probably put another box on here. We see that there is a significant amount of support that was broken. That's where the problem was. We saw this thrush down. We saw that support that was broken. We have a double line, both the cruise and the stall, both the high volume node, if you will, and also the support level that we look at, okay, the unfair low, was lined up together on this. When that breaks, that's a problem. That's going to create some resistance on the upside. Now, probably seeing a very similar situation with silver. That's not silver. There you go. Looks same, relatively the same. Dropping off up a little bit today. We saw this really oversold situation on the aileron. And what you're looking at right now on your screen is a combination of two things. One, the Commander Series. The Commander Series looks exactly like you're looking at right now. The only thing that's different is that we added the aileron on here, which is a momentum indicator. All that's available on the trading app store over on TradeStation. So, you can get that over there. I put that in the chat for you. Thank you. And look at the reviews and what people are saying about this. I think you'll really find that interesting. But what's interesting here is that really we saw this rollover back over here. 2601 was a buy point. Really never got to that in a significant way when we kind of called that and dropping down. Where is that level of support? I mean, honestly, I like this from a perspective of an inflation play, but you got to go back to the weeklies. Look at 2076, which is right where we got to, right about here, very close to that, is that long-term July to July 1 year consolidation. You really have to look at here in the area of this. I don't know, you guys hear that? I think they're doing some work on the building here. It sounds like somebody has a power something saw cutting it down or something. Hopefully we'll make it through this discussion. Anyway, so what we have is this range, this long-term range, and it's kind of been sitting inside. You can see on a weekly basis is nothing. Why do I go to weekly? Because I want to see the overall trend. Now, again, there are certain things that maybe from a fundamental standpoint, diversification in a portfolio you want to add, and that is not necessarily predicated by what you're trading, but more so about, the idea of where this lies in terms of the concept of bigger picture items. So we're putting that aside for a second. But from a trading standpoint, really got the nice support, really nice support, at the 2076 level or so. So when we look at that, we look at the weekly, and I look at silver, for example. Let me put that in here. You can just drop it in there. Take a second to calculate. Now, without calculating is multiple time frames, right? We're looking at 30-minute, 60-minute, 240-minute, looking at daily and weekly. That's my setup. That's what I like to look at. What we're seeing is nothing here. There's nothing on the weekly. There's a short on the daily. There's a short on the shorter term time frames as well. Nothing good about this from a technical standpoint, except for one thing, that it is in a little bit of an oversold that we saw right about here. Divergence a little bit on the momentum indicator. That's why we use that as well. So we use this kind of multiple time frame, which is so powerful to provide multiple levels of indications. Instead of looking at chart after chart after chart, I got all my charts right here telling me what it says. I know that we got nothing on a consolidation on a weekly. I know we got short on a daily and so on and so on. I don't have to go, okay, well, what's the weekly? What's the weekly? Okay, wait for that. What's the daily? What's the 10-minute? I don't have to do that. I can kind of just simply look at where we are here, how long it's been in that area. That's why this is so powerful. Now, what are we looking at here? Well, we're looking at really no support on the silver right now. Yeah, we're seeing a bump up right now to, where is it? 2177. 2177 right there, which is the upper end of the mini resistance that we have right now. Got to break through that really, but then after that, there's a nice hole. So really, you got to kind of look at this kind of area right about here as the opportunity for upside at 23. That's a nice move to the upside if we do see the reversal, if the momentum picks up, and if we can break above. That's a big issue right there. Kind of a little lesson on how to review that. DD, not much to look at here, really. This was a great fundamental potential story in that it is the Uber of China in concept. And the problem is, though, that the Chinese government didn't like some of the things they were doing, and this is putting a damper on there. And the question is whether or not they're going to lift their, no pun intended on that, whether they're going to lift their oversight in such a degree if they can comply. If Didi, the company, could prove that they were not sharing customer information, releasing it, etc., and they can close up any holes that may be out there, and of course, pay the fine, well, then that's something that will happen, possibly to the benefit of that. Affirm, I think this is interesting. This is a buy now, pay later stock. We've been watching this. I think it's really interesting. I talk about this. We do hold some of these, of course. I do make disclosure of that, but this one is kind of interesting. It caught my eye. I like some of this patterning. Now, it's not the most glorious pattern. It's still in a big fat consolidation, right? If we look at this and kind of draw this consolidation, it's popping out of it right now, but kind of got a little bit below, a little bit above. You really have to have a definitive breakout in this. And really what I'm looking at is, you need to see it kind of get above these areas right here. This right here. This right here, and that coincides to about $74. Now you have some work to do to get there. Once you get there, I think you're home free on this. I think this is an interesting one, and do your research on this, because fundamentally, if you think about it, if it's buy now, pay later, depending on the risk, a lot of companies are really looking to utilize this model where people could do the old-fashioned installment plan, but then the risk is not on the company. They also take a piece of the action of the sale, which is interesting, of the product. So take a look at this. I like this little breakout that's happening right here. It's kind of just sitting there right now. But this pattern where you have this breakup, beautiful, then this just nothing happening, kind of this weird deep cup and handle, which is an Investor's Business Daily kind of special pattern, but also that you're breaking above some of these levels, I think can be really interesting. FUV, this is, oops, clear that. All right, this is Arcimoto. This is another EV company. They have this really cool Roadster, and they have a few other cars out there that seem to be in play. They're relatively mid-priced, I'll call it, fun vehicles, FUV, right? Fun utility vehicle. It's interesting. It's sitting right above its level of support right now, right? This is resistance on the way up, support on the way down. So if we look at this on a daily basis, and again, you can use anything you want to with this, right? You could use 10-minute, 60-minute, whatever your particular trading pattern is. I use daily. The lessons are all the same. All the charts, you could read the same. We see a little bit of a momentum drop here. That's a little concerning, but still above the zero line, which is very important. We're seeing that it got down to support and it bounced up. Right now it's trading flat on the morning. If you can hold this support right here and look at this, you saw this big move to the upside. Everybody got very excited about it. But this big move to the upside, holding right here, then you got kind of a hole up to about 19.5, 20. That looks interesting. Astra, if you're interested into space, this is a company that's doing some launches of rockets with payloads on it. Right now trading at 1070. So let's kind of move this and see where we are. 10. Yeah, which is about the move this. Where am I? 1080 right there, right on level of support. That's kind of interesting. Could trade down a little bit more, possibly down to about the 1051. Lots of long-term support here. Very volatile. Seeing momentum pick up. They issued some earnings. You can't expect those to be too good right now. Disney's been again another consult. Look at this. This is just thin. Nothing going on. Came out with earnings last night. Better on the subs for the Disney Plus, concerned about parks, but they're not worried necessarily about it, but okay. Bottom line, Disney's got a lot more work to do. Disney really has to break, I would say 189. Let's kind of go back a little bit. Right about here, what is this, 188, 189. Right now trading at what, 186.90 in the pre-markets. That's something interesting. What else do we have here? A couple of breakouts. Dillard's, kind of moving up, very, very small volume. Be careful with this one. SUM, somebody asked me about, I believe. Summit Materials trading 35.62 this morning in the pre-market. 36.79. I mean, it's very clear. You can see that if you didn't even have this on your chart. Nice momentum build on the upside. Good hold of support on the downside. So not sure what this does. 30-minute. So that nice break, then a consolidation. Good looking chart overall. Nice step pattern to it. Nice move to the upside overall, kind of from the April lows, doing very well. Materials obviously very hot. Somebody asked me about coin. Obviously, coin's going to be very much, even though they came out with earnings and there was some question about the long-term potential of consolidation of the industry and more so the fees coming down over time. Going to trade right with probably the coins. Going to see a correlation there. What do I see here? 246 now. I mean, somewhere here about 238, 236, something like that. Looks like some downside support on that. So you get trade up to 263 today. You got some work to do. Above 274, you can see a short squeeze up possibly. A lot of work to do on this name as it came up at 420, 425, and then it's been just consolidating. Really, I mean, you're above a good level here. Really need to see it break above all these levels. Not enough time to really give us any good information metrics. Listen, we're going to end it there. Thanks, everybody, for joining me. We're going to see you again next week. Make sure to go over to the Trading App Store and get your subscription right now.